The Securities and Exchange Board of India is the primary regulatory authority overseeing the securities market in India. Established in 1992 under the SEBI Act 1992, it was constituted to safeguard the interests of investors, promote and regulate the securities market, and ensure its systematic development. SEBI emerged in response to the malpractices in the securities market during the late 1980s and early 1990s, including insider trading and stock price manipulations which undermined investor confidence. Let's see the functions of the SEBI. SEBI's functions are broadly categorized into three main areas: protecting investor interests, regulating market intermediaries, and ensuring market integrity. Protecting investor interests. SEBI undertakes numerous initiatives to educate investors about the securities market. These programs are aimed at making investors aware of their rights, the risks involved in investment, and the avenues available for redressal of their grievances. SEBI collaborates with various educational institutions, conducts seminars, and runs online campaigns to spread financial literacy. SEBI formulates and enforces guidelines that ensure transparency and fairness in the securities market. By issuing these guidelines, SEBI aims to curb malpractices and ensure that all participants operate on a level playing field. For example, the guidelines on disclosures require companies to provide accurate and timely information to investors. Redressal of investor grievances. SEBI has established a robust mechanism for addressing investor grievances. The SEBI Complaints Redress System, short for SCORES, is an online platform where investors can lodge complaints against listed companies and market intermediaries. SEBI ensures that these complaints are resolved in a time-bound manner. Regulatory market intermediaries function of the SEBI. Under that, stock exchanges, depositories, clearing corporations. SEBI oversees the functioning of stock exchanges like the National Stock Exchange and Bombay Stock Exchange, ensuring they comply with regulatory norms. It also regulates depositories like National Securities Depository Limited and Central Depository Services Limited, which hold securities in dematerialized form, and clearing corporations that handle the cleaning and settlement of trades. Brokers, merchant bankers, portfolio managers. SEBI registers and regulates brokers, merchant bankers, portfolio managers, and other intermediaries. By setting eligibility criteria, capital adequacy norms, and operational guidelines, SEBI ensures these entities operate efficiently and ethically. SEBI employs surveillance systems to monitor market activities and detect any irregularities or fraudulent practices. It takes stringent actions against market manipulators, ensuring that the market remains a fair and trustworthy place for investors. Moving on to the regulatory framework. The regulatory framework governing the SEBI is anchored by several key acts and regulations. SEBI Act 1992. This act establishes SEBI's statutory authority and outlines its powers and functions. It empowers SEBI to regulate the securities market, register and regulate market intermediaries, and take enforcement actions against violators. Securities Contracts Regulation Act 1956. This act provides for the regulation of securities contracts and the functioning of stock exchanges. SEBI administers this act to ensure that stock exchanges operate in an orderly manner. Issue of Capital Disclosure Requirements Regulations 2009 (ICDR). These regulations prescribe the disclosure requirements for companies seeking to raise capital through public issues. They ensure that investors have access to all necessary information to make informed investment decisions. Prohibition of Insider Trading Regulations 2015. These regulations prohibit insider trading by making it illegal for individuals with access to non-public, price-sensitive information to trade securities. SEBI ensures strict compliance with these regulations to maintain market integrity. Moving on to the role of the SEBI in promoting market development. SEBI plays a crucial role in fostering the growth and development of the securities market through various initiatives. SEBI has been instrumental in introducing new financial products such as derivatives, real estate investment trusts, and infrastructure investment trusts. These products provide investors with more options for investment and risk management. SEBI has simplified the procedures for companies to get listed on stock exchanges, making it easier for them to access capital. Initiatives like the listing obligations and disclosure requirements regulations ensure timely and accurate disclosures by listed companies. SEBI has taken steps to attract institutional investors, both domestic and foreign, to the Indian securities market. Policies like the Foreign Portfolio Investors Regulations aim to create a conducive environment for their participation. SEBI emphasizes the importance of good corporate governance. It has issued regulations like the Corporate Governance Norms, which mandate companies to adopt best practices in governance, thereby enhancing investor confidence. Let's see the recent initiatives by SEBI. SEBI continually evolves to address new challenges and leverage technological advancements. SEBI has introduced an online system for the filing of prospectus by companies planning to go public. This move has made the process more efficient, transparent, and accessible. SEBI is working on setting up a social stock exchange to help social enterprises and voluntary organizations raise funds. This initiative aims to channel capital towards socially impactful activities. SEBI has intensified its efforts to promote financial literacy across different sections of society. It runs various campaigns and programs to educate people about the importance of investing and the functioning of the securities market. Recognizing the increasing cyber threats in the securities market, SEBI has implemented stringent cybersecurity norms for market intermediaries. It also conducts regular audits and inspections to ensure compliance. SEBI and the Reserve Bank of India share a symbiotic relationship in maintaining financial stability and regulating the financial markets. While SEBI regulates the securities market, RBI oversees the banking sector. This division of responsibilities ensures a focused and effective regulatory framework for each sector. SEBI and RBI collaborate on various aspects to ensure financial stability. For example, they work together on issues related to monetary policy transmission, regulation of non-banking financial companies, and systemic risk management. Both institutions also coordinate on investor protection measures and financial literacy initiatives. To conclude, a well-regulated securities market is fundamental to economic growth and financial stability. SEBI's role in regulating and developing the securities market is crucial in fostering a trustworthy and vibrant investment environment. Understanding SEBI's functions and regulations helps in appreciating the broader framework of financial stability and market oversight. As SEBI continues to adapt to the evolving global financial landscape, its focus on investor protection, market integrity, and development will remain pivotal in shaping a resilient and inclusive securities market in India.